Hi everyone. I want to work through how to do a bank reconciliation. This is for the bakery and restaurant for January, and it's step 7 in your instructions. So a bank reconciliation is the process of entering the balance from the bank statement and then checking off the items in QuickBooks that are on the bank statement. When you're finished, there won't be a difference. So what I mean by that is when we first start, let's just start it. So when we first start, we want to make sure we have the checking account chosen. It shows a beginning zero balance because we're just starting QuickBooks. This company has not been in QuickBooks before. What you want to do is enter the ending balance from your bank statement that's given to you. See, this says a beginning balance of $83.53.99. Yours will not say that in January. It will, however, next month give you the correct beginning balance. So the first thing we do is take the ending balance of $10,970.36. So $10,970.36. And the ending date on that bank statement is January 31st, 2018. Oops, I guess it would help if my numlock was on. So I've got my beginning balance and my ending balance and my ending date. Please do not enter anything down here in the service charge or interest earned. You will enter those in journal entries. And then click Start Reconciling. So we've got a statement ending balance that we entered of $10,970.36. We haven't cleared anything yet. We have a zero beginning balance, and we haven't cleared any payments or deposits. Our goal is to get the difference to zero. This helps us because we have an outside third party verifying our transactions. So in my instructions, I talked about that when you begin the reconciliation, you're asked to enter the ending balance and the date. Beginning balance is zero. Because you've never reconciled this company in QuickBooks, you need to check off the beginning balance in deposits of 8353.99, which, if you note, was our beginning balance here. This is the reason that we entered the beginning balances in journal entries so that we could preserve this reconciliation function. So we're going to check off this 8353.99. That's our beginning balance. And you'll notice these journal entries that said beginning balance, those are the checks and stuff that hadn't cleared at the time we switched at December 31st. So then we take our bank statement and we scroll down and we want to check off everything that's on the bank statement. We want to find it on QuickBooks and check it off. And notice the way this bank statement is set up, it shows you the credits, meaning the electronic deposits. So these are the mostly merchant services, but sometimes they'll do a return to Target. Sometimes they'll get charged for in this instance, Arizona Daily Star. Something happened at the Arizona Daily Star, and they were charged that way. Regular deposits are for when that's the bottom of the sales receipt. This is what the owner of the company or the manager took to the bank, literally took into the bank. These are electronic deposits. These are face-to-face or in-person deposits. Then you have all the withdrawals, and I've given you what these should be posted to. So you should have most of that. Also, you will enter these, and in the instructions it talks about entering these as one journal entry. When you do that journal entry, do not include the tax payments because you've entered those separately. When you're finished, you'll have one credit that will total $9,119.16 minus all of the tax payments that you didn't enter in that journal entry. So first, we probably want to do the deposits. So we're going to click on deposits. It's easier to do it this way if you click on deposits, because then you're only seeing the deposits. And you can also sort everything by any of these columns. I would recommend leaving it by date. So we're going to go over here to our deposits on the bank statement, and we're going to start checking them off. 121612 was an electronic deposit. So we go over to the bank statement and we find 121682 and we check it off. And we continue. It helps to print this bank statement and check it off as you check it off in QuickBooks, because then you can see what you didn't check off, what's missing in QuickBooks that you'll need to add. And then you can look at, when you're finished checking stuff off, you can find out what you didn't check off that should have been checked off. For instance, if you make a deposit in January and it still hasn't cleared by January 31st, there's probably something wrong with your deposit. I'm going to pause this and go ahead and check all these off so that I don't bore you with this. Okay, now I've gone through my bank statement. I've compared it to everything up here for the deposits, and I checked them all off. Now I have checked a total of $59,510.84 in deposits. How do I check that? How do I verify that's correct before I proceed? Well, I can go back to my bank statement and I can say they have listed $41,904.14 in credits, $92,52.71 in deposits. So those are all deposits. Remember, the credits are the merchant fees, merchant transactions. So we're going to go through and add up the 41,904.14 plus 9252.71. Now for a regular month, we would be able to just compare this to the number of the deposit amounts that we actually cleared. So it should be the same thing. However, this month we had a deposit due to the fact that we started the company in January. So we want to add that to it. We want to take the $51,156.85 and add $83.53.99 to it. So we've got the $59,510.84. So we're looking pretty good there. Our next step is to click on the payments. Payments take a bit more time. They're a bit more in-depth, and you'll want to make sure that you have everything correct. So let's do the bank statement. Let's skip to the payments. So here's all the withdrawals. Those are those debits I was talking about, the bank debits that you have to enter. Yes, you could enter each one individually, but you don't want to spend the time to do that. You can just do it in a journal entry. And let's see if we can find that journal entry that we did. So we almost always date our journal entries at the end of the month. So we're going to go down to the bottom of payments and look at the end. Here's this journal entry here. And you can always click on and look at any transaction in your bank reconciliation without leaving it. So I clicked on that. Nothing popped up, so I'm going to say edit, because I want to see it. Okay, so here's my journal entry that has those bank deposits or bank debits in it. So if I look at my bank debits, I can actually go up to, oops, sorry. So the first one, restaurant supplies, debit $100.09. So I've entered all of these except for the payroll payments. There's one to IRS, one to Arizona, and another one to IRS. The first IRS one is for your 940 payment. The Arizona Department of Revenue is for Arizona withholding, and the IRS tax payment is for your 941 payment, which includes Social Security, both company and employee, and the federal tax payment. So all of those together. And those are on your journal entry for tax payments, for payroll tax payments. So if I want to look at this, I can, if I want to verify that this is the correct amount, I could take this total here of 9,119. Let me just do that. 9,119.16 and subtract these tax payments. So there's 4 of them here, 5, 6 of them here. So if I subtract all of those and I subtract these payments, including this 20 cents that we entered, I will come up with the total on my journal entry that I credited to the checking account. In other words, taking it out of the checking account. So I can actually go in here and check off this 5867.04 and this extra 20 cents. Because if you remember from my instructions, that 20 cents was not included in your journal entries. There was an extra 20 cents that wasn't included in your payroll tax payments. There was an extra 20 cents that you had to make a journal entry for. Now that I've done the debits, I want to move down the bank statement and I want to go to the checks, and I'm going to go through each check. And this is where you're going to find problems, because a lot of times the client does not get the check amount correct on the check stub. We will always assume the bank account is correct unless you're told otherwise. So if, for instance, something on here, so say check 1249, and I don't know that this is true, 1249 said 553.10 when you entered it, and it's 553.20 on the bank statement, you will need to change it to 553.20. So you're going to go through and check off everything that cleared. These with the strange numbers are payroll checks, and they're from your payroll journal entry. So if you look through your transactions, so you've got a payroll journal entry, and these are the checks. And you should probably enter your check numbers in the memo field so you can verify that those are correct. I didn't do that, and you'll find that you probably won't do it later either. And the beginning balance ones probably should have a check number in the memo area as well, but it's not necessary. So I'm going to go through and check off all these payments, and I'm going to pause this while I do it so you don't have to watch me do it. Okay, I've checked off all the payments, compared it to the bank statement. And when I'm finished checking off all the payments that cleared the bank and correcting any differences in amounts, I came up with a 0 difference. If you do not have a 0 difference, please do not click Finish Now, because what happens then is QuickBooks just makes an adjusting entry. It actually lets you do it, which I totally disagree with. You should not be able to finish a reconciliation unless you balance. But QuickBooks, in its infinite wisdom, has decided that if you want to finish it now, they'll just do an adjusting entry and call it a bank reconciliation adjustment. and put it on your income statement, which is a bad thing. We don't want that because we're accountants. Clients do that kind of stuff, but we are not expected to. So when we're finished, if we look down through here, it's always good to scan this to make sure that the things that should have cleared actually did. If you have a lot of stuff up here that didn't clear the bank statement, then there's probably something wrong with it, and you want to investigate each one. The only ones that didn't clear should be towards the end of the month. Like there was a payroll check that didn't clear, which is very common in the restaurant industry because their payroll checks are typically pretty small. They make most of their money in tips. So there were a couple of payroll checks that didn't clear, especially this little one. And then there were some checks that were written towards the end of the month that didn't clear, which makes sense. But if there was a check written in January 2nd or 3rd that didn't clear, there's a problem. So keep an eye on that stuff. When you have a zero balance and you're happy that everything looks good in here, you can click Finish Now. And it'll tell you you've reconciled it. And you can see the report, view the reconciliation report. Now, how do you get this to me? Because you have to turn this in. You go up here and you click on Print, and then just choose Save as a PDF. And click Save, and then it'll pop up and ask you where you want to save it. That's how you do a bank reconciliation in QuickBooks. I'm disappointed in the fact that they didn't teach it to you any better in the learning portion in that PDF that we had. If you have questions, reach out to me or Bethany. We'll be glad to help. Thanks. Bye.